I'm Matt Bishar with NAREIT.com here at the Wynn Las Vegas for REITWorld 2015, NAREIT's annual convention for all things REIT. Joining me for this CEO Spotlight is Paul Pittman, Chairman, President, and CEO of Farmland Partners. Paul, thanks so much for joining us.
Thank you.
Now, when investors think about farmland, they naturally picture crops and fields. However, your company has also utilized your land for renewable energy projects. Can you talk about the role that those sorts of initiatives will play with the company going forward?
Yes. So when we buy a farm, we try to buy that farm based on its agriculture value and its production capacity for agriculture. But as soon as we own a piece of property, we go in and identify the solar, the wind, the minerals, the development potential of that property, and quickly focus on those properties where we think there is an upside. Because when we can get a green energy project, it's frankly a much higher return for our investors than just the ag rents would be.
And can you talk about the creation of the company's FPI Loan Program and how that addresses a need that you're seeing in the market?
Yeah, so one of the things that is occurring is obviously the fundamental farmland values haven't really declined, but the incomes of farmers are declining with lower commodity prices. So what we're offering to farmers is an opportunity to make them a loan based on an asset-based loan. So we take land as collateral, which can help them through what's a somewhat squeezed profit and loss statement for a short period of time. And so it's a good program for us, good returns, and it's a good program for the farmers because it's another piece of financial flexibility for them.
And lastly, your company owns farmlands across multiple states. Is there a particular state or region right now that you see as more of a growth area going forward?
Well, we do own property clear across the country. We think that the most rapidly growing area for us will continue to be the southeastern United States. Obviously, the biggest region now, particularly with this large $197 million transaction we just announced, is the Midwest. That makes sense. That's actually the most productive region in the United States. But we like the Southeast. And the reason we like the Southeast is we think the properties are undervalued. The cap rates we can achieve there are quite high. And because it's a reasonably densely populated region, the upside potential for solar, wind, other sorts of real estate development are very high on those properties. So we'll continue to put a lot of money to work out there.
Great. Paul, thank you so much for joining us.
Thank you.
For more from REITWorld 2015, be sure to visit REIT.com.